Good morning, traders. Paul here with GammaEdge. Today is Monday, the 13th of March. Let's get started. Pause your players here. Read to the very bottom. If you agree, hit that play button. Summary for today, red across the board. A couple things to be aware of. We're in our fifth consecutive day of what we call the CT, the cumulative tick closing lower. Short-term bearish. Notice this is starting to get a little long in the tooth. We would not be surprised at a reversal. Another short-term timer that we have, and you'll see these on the next slide here, we have something called a railroad track down pattern. We are in the fourth consecutive day. Again, this is a short-term bearish pattern. We, again, are long in the tooth on this, so just be aware of that. Across the board, our longer-term timer, what we call the ribbon, it's inverted to the bearish side. And I've listed the various ribbons that we watch here, what we call the quality tick in the ARCX, that's the TIKRC symbol, actually converted back in February and started flashing a down signal there. The USC, which we call the kitchen sink, it's kind of the early warning system, transitioned right at the close or the open on 3.7 or 3.8. So last week, the TIKRC, which is the S&P 500, just tracks just the stocks of the S&P 500, transitioned on the 9th. Same thing with the Russell 2000, TIKRC, and then the Qs transitioned on Friday. And just want to note that we're wondering, last to fall, is this going to be the first to rise if we do get some wind in our sails to go north? So just be aware of the overall structures here. Market breadth, as viewed by our 52-week new high, new low indicator, had the 52-week new lows outpacing the new highs. We had the worst day for the bulls in 2023 on Friday, so just be aware of that. Not a capitulation day, but certainly we took out a lot of new highs and zeroed a lot of gains for 2023. Transition ranges are well above us, and they really set the upside target for lower exposure for the markets. By our eye, 39.55, 39.60 is the combo range. That's the AM and the PM settled. 39.50, 39.55 by other measures, and then it gets looser depending on where we are in that. But the balance of week really does point to this 39.50, 55 zone as something to be watchful for. Charm flows are really going to be determined by where we are above 3,900 or below it. Below, we do expect more volatility. Above this, we could push north pretty easily, as a lot of those in the money puts now become out of the money and will push us north as they decay. The 0DT and 1DET folks should be looking at 38.15 today, as well as 3,900. So below 38.15, we would see a potential push to the Livermore level of 3,800. And we would wait. We would wait to see if that 38 level is going to hold. If it does not hold, then we would increase our net exposure to the downside. The 3,900, if we do push there, we'd like to see a break through that. And if we do see a break above that, we'll be probably prudent to close some of those short deltas and start increasing your long exposure. The market model via the cumulative tick. This is the TIKRC, as you can see here. This has got a bunch of views here. So this is the ribbon that I was talking about. You can see it's clearly heading down, negative slopes. The shortest moving average is below the longest moving average. This is a clear signal. This is the one that transitioned on February 22nd and has been in that downtrend. So that was a good early warning system for us. We did get a failure last week, and then we've been down ever since then. We track this, and we've extensively tested this in terms of back testing, and very, very simply, if you just open up some 2x bear ETFs, when you get these transition signals, you can do quite well. We assign names to these: tag combo 8, tag combo 8. Here's tag combo 8, gives you the conditions right here. And you can see we have either a trigger day, the first day that it occurs, or a continuation day. And we just completed a continuation day, the fifth one, in this CT lower signal. So every day the selling just continues. The market is doing risk off, and this is a very easy, almost brainless way to check this. And it tests very well with the overall daily returns. These are entries on these days, 71% win rate. The other one we have is what we call the railroad track pattern. And Kind of the same methodology, a little better statistics over here, a little better gains, waits for more of a confirmation because it does have a smoothing mechanism with these short-term moving averages. Just be aware of this though. We just completed day 4, very, very clean railroad track down pattern. You can see that. And so just be aware that you could get crossings, and if you do get a crossing, that would turn the signal off, turns the signal off and puts you into the other direction. This tests both ways, or very well both ways. So just be aware that if you're tracking this using the TOS or the TradeStation tools, something to have your butts in seat and be aware of that as we are a little bit long in the tooth and on these. Taking a look at the gamma levels, deltas are down across the board on both the PM settled, which is here on the left, and the combo on the right. All of these have moved. I've noted them here. That's important. Come and read the details in the Discord in the SPX channel that I put in this morning. What to read into this, but effectively the complex is moving down. Just think of it as short-term put exposures increasing, which is lowering the gamma in the overall complex and lowering the deltas, of course, as you add those puts, net puts. Over here on the combo, down from 4,200 on the plus GEX. That's remarkable. You'll see in the last slide here, this has grown a dramatic amount in terms of net deltas. So I just want everyone to be aware of that there is an upside target of 4,000. Everybody's gunning for it. It's a Livermore level, of course, ends in zeros, et cetera, et cetera. Just be aware of that. 3,800 still is the downside target. It's where minus GEX is unchanged. Also want to draw your eye into this. There's a lot of volatility, obviously, with the bank exposures and everything that's going on with Silicon Valley Bank. 3.41%. It's over double what we normally see as a conservative expected move. So just be aware of all of that. Charm flows. The key levels here are actually 3815 and 3900. You can see it projected here. This is the zero that you can see here on the projection plane down below it. So above this, these in the money puts will now flip to out of money status and will contribute to positive charm flows. If we lose 3815, there isn't actually a lot below us, but just be aware if we do lose 3815, this flips it over to an in the money status and we could get pushed down into 3,800 very, very easily, or even lower. There is other magnitudes that are present here, and they will grow as the spot price drops down. Note, virtually no contributions from the call side of the equation here today. You can go play with this, interact with this here at this link here on the bottom. The SPX PM settled complex, 100% put dominated. I think that's important for everyone to realize. The transition zone for the PM complex, this is the literally what everyone uses as their trading vehicle, or most people use as their trading vehicle for the dailies, for the 0, 1 DTE, et cetera, the weeklies. Very fat. 3,900 is that level your eye can easily see. If we get above 3,900, we're starting to get into a smoother sailing zone. Transitions with the gamma are fat, they're loose, they're very, very hard, not really well defined here, but you will see in other views that, especially the combo view, is very, very well defined. 100% put dominated across the board. So just be aware of that as these puts do decay, they could contribute, depending on where we are in the overall structure, could contribute to the overall charm flows. 0 DTE. The thing to watch for today, first of all, transition is incredibly tight. This is very good, 3890, 3895. So above this level, there's virtually no contributions. All of this will be out of the money. So as we go into the afternoon session, if we are above this 3890, 3895 level, aside from any 0 DTE action, which would open new puts down here, if we can get above this transition, I would expect a push north into the close. Just be aware of that. We have a lot of puts that are put gamma that's coming off the table today. This extremely well-defined area of the transition usually means we're going to break one way or the other. So just keep that in mind. The 1 DTE, we do watch the 1 DTE. So this is our view into tomorrow. 3870, 3890 are key levels. If the price is above that, these will be out of the money. Charm flows will be to the north. They will push us upward. Contrary, like you see right now, if we are below these will be in the money puts dominating the conversation for tomorrow, and charm flows will be to the south. So you just keep that in mind, and this is why we tend to pin around different strikes. Also have highlighted some areas where the delta actually flips. These are low delta and gamma transition exposure areas, and we would not be surprised at all if we were to push and hide into these areas into the overnight session. So just keep mindful of that. We call these lotto tickets. If you can get some free trades on a broken wing butterfly or just a normal butterfly or some structure up there, it might be worth your while to take a zero risk trade to go north and just see if the lotto ticket will work out. Taking a look at the crystal ball for the week, we've just turned on just the expiries for the week. This is the PM settled complex. You're going to see the combo complex next. First of all, for the week, an extremely large amount of puts coming off the table. Depending on where we are, the charm flows will be important there, and monetization. So just be aware of what's happening there. 3850, 3800 to the downside. If we're down in this area, all of this will be in the money. That will be very, very difficult to break up into the transition zone. By the other hand, if we can get above this 38.95 zone for the week, you can see that there is the potential of actually pushing north for the week. So that is very, very interesting to us. 39.35 right now is that P-trans level. If we can get above that P-trans level, that does open the door for the 4,000 strike. Taking a look at the combo complex, though, because this is the expiry monthly, and it's quad witching this week, we include the AM and the PM. This is called the combo. And when you have that, it paints a slightly different picture. So first of all, what I want everyone to realize is that very, very tight transition, 39.50, 39.55. So that is the upside target. We are extremely well extended below this. Typically, this resolves itself one of two ways. Either price is going to advance upward or the transition is going to come down. The only way the transition comes down, and I know this is kind of counterintuitive, is that if we start seeing out of the money calls go in here, and if we do see some sort of a rally, it could push us down and create a new normal. 3,900 is really the line in the sand for the week. You can see that here. There is some growth up here at 3,950, but it is the last net gamma transition before we head into positive gamma areas. So that's pretty important also. 3,800 here to the downside. You can see that below that there's not a lot of exposure. So we do think that the 39, 38 levels with that 38.50, I mean, your eye can see this. I don't have to explain every one of these. You can see where we could play, where it could get noisy, choppy, et cetera, et cetera. Clear break points above 39 and below 38. Taking a look at the combo, very, very clean structure to read. You guys should have no trouble with this. Again, 39.55, 39.60, super, super duper clean here. 4,000 is clearly the upside target where everybody is targeting. I mean, the gamma level is just enormous. The delta, put-dominated delta, is enormous also. So that is the short term where everyone is targeting. You can see where price is. We note this node right here, and there's a couple others that could be developing here. Just want to show that as puts come off, we're going to start seeing in-the-money calls start rearing their head. That's a good thing. That means people are starting to close those puts. 3,800 to the downside. Note, though, everything above us, this is where we have in-the-money puts. Everything above us is still very, very heavily pushing us downward. We need price, based on the other action from the previous slides, we need price to start moving up towards transition, or the call speculators to come to the table and start stepping up, and we're not seeing it right now, so just be aware of that. Final slide here. Again, very clean. Don't have to belabor the point here. This is remarkable for a Monday, first of all. Independent of it being, the monthly expiry this week, this is really, really important. We're seeing this 4,000 strike. It's been up at 42. It's just grown enormously today, and so this is clearly what everybody is targeting as the upside. The JPM end of month short strikes at 40.65. These are short calls. Not really in play here, but very, very visible in case you're wondering and are new to these charts. Super clean transition that we've got here, as I indicated, very well defined. It draws the line in the sand. Things are going to work out pretty well if we can get above this. If we can't get above this, or if we get very near this, things could work out well, but just be aware that that 4,000 is the target, and these are the short-term 39.55, 39.60 is that near-term target. Down here, GEX at 3,800, very important. 39 could become that level as we move up. Note these are in the money, so this would have to vaporize and get smaller as we move up, and we'll just have to wait and see what happens. So that's it for today. If you have any questions, comments, just join us at GammaEdge.us. In the upper right-hand corner, there's a pricing tab. Click on that, fill out the blanks, come on in for a 14-day free trial. All the tools turned on. Ask your questions. We have a great group of traders. Everyone's willing to help each other, and it's actually quite a bit of fun. Great community. Follow us on Twitter at GammaEdges with an S, and then here on YouTube, of course, two things. First thing, if you like today's commentary, smash that like button. Gives me immediate feedback that I'm providing the content that you want to see that is actionable for you. And then two, of course, subscribe, because Taylor, myself, and Michael post videos. And if you want to be notified next time we post something, that's the way to do it. So with that, I bid you farewell. Hope to see you in the Discord. Make it a great week. Do not get out over your skis. Should be a little volatile here. So take care, and we'll see you in the Discord.